What's going on, YouTube? Welcome back to another video. Today I am going to be teaching you guys how to place your stop losses. I'm saying this video was requested, so bro, if you're watching this video, bro, pay close attention to like every detail that I say in this video, because stop loss placement was something that I had trouble with when I first started trading. And it took me a little while to get used to where to put my stop loss at, but it's not really that complicated once you learn uh order flow. Once you learn order flow, stop loss placement is very self-explanatory. So I'm gonna be showing you a bit and piece of that inside of this video. Know what I'm saying? So make sure you like the video, subscribe to the channel, and know what I'm saying, let's get into it. So the first, we're gonna be looking at 2 trading days, and within these 2 trading days, I want you to realize that I am going to be showing you stop loss placement, but I want you to look at the narrative that put you inside of this trade, because you can't place a stop loss until you place a trade. So you want a narrative first. You know what I'm saying? So I'm gonna just go over quickly about what happened in this day. So this is Friday. Price action, we was still bullish. Right, this was Friday. We was bullish because I still wanted to see price. Oh yeah, we already read that. I still wanted to see price gravitate to this high. So until we get to this high, I'm relatively bullish. And so on that day, right? Um, fuck. Okay. At 9:30 or at 8:30, we got a nice candle displacement higher, and then we traded into it. So I don't trade until 9:30. So all of this before 9:30, I'm just gonna be using it at 9:30 to form my bias, right? So at 9:30, we got to drop down here, but I'm bullish. So what I want to wait for is a run on a specific low and then a shift in market structure and a fair value gap. So I don't get that. We don't got no shift in market structure here because we didn't break this high. Boom, trade back lower. No shift in market structure here to go long. Boom, we took out a low here. We took out a high. That's what I want to see. I'm bullish. I want to see us take out a low, then take out a high, shift the market structure. And also, we left a fair value gap inside of that range. Okay. So when you are in a buy program or a sell program, order flow. So in this case, we're in a buy program running up to this buy side liquidity, right? When you are in a buy program, price should no longer break down candles, and price should hold PD arrays. PD arrays is your order blocks, fair value gaps, breakers, everything like that. And you know when you in a buy program, because price manipulates the opposing side of liquidity, it then give you clear, know what I'm saying, clear candles that shows that we're going to continue higher in that opposite direction of the liquidity that we just ran. So if I'm bullish and we just took out sell side, and then we got a nice 3-run candle higher, taking out this high and leaving a fair value gap, then I know that my buy program has started to go to this buy side. Okay, and if I'm trading inside of this fair value gap, if you've seen the last video that I posted, I said if I have 2 fair value gaps back to back, then I will want to allow it to trade into the second fair value gap. Okay, so if I was to get in this trade inside of this fair value gap, right? Say I got in long right here, I would want my stop loss to be either down here, best case scenario down here. But in this case, I will have my stop loss right here. Okay, and I would target this high. And you will ask, bro, why would you put your stop loss right there, right? Okay, why would you put your stop loss right there? And this does look hindsight, but it's actually not. I'll tell you why I put my stop loss right there. Because what you want to realize is these PD arrays, fair value gaps, are PD arrays. You want price to respect them. If price disrespect a fair value gap, then we're obviously probably not going to go in that direction. So when price creates these fair value gaps, they don't create them for no reason. They create them so price can respect them and find fair value to continue to run higher. So if I'm expecting price to find fair value inside of this fair value gap, then I'm expecting this fair value gap to hold price to go higher, which means I don't want to see it fails, which means I can trust it to not get stopped out, right? I'll show you something. And this is why I put my stop loss at the low end, okay? If you grab your Fibonacci, every fair value gap has quadrant points. Low end, 75%, 50%, 25%, high end, right? So if I trade it inside this fair value gap, I will only want to see price trade into this fair value gap, but I want it to stay above 50% of this fair value gap. 50% of this fair value of this one right here. I'll highlight it real quick. 50% of this fair value gap is at that purple line, right? So my stop loss can be anywhere below that purple line, right? Below it. You can have it at 75, you can have it at the low end, but you shouldn't have it on it. Anything below it, a tick below it, that's fine, right? Because I'm expecting that price to hold. And since we got two fair value gaps back to back, I don't want to see it trade all the way into the second one, because we only needed to trade in here, and we only need to dip back in here just a little bit. It does not need to come all the way down. So that's one example right there. Another example right here is you got another fair value gap. Okay. Now, when you trade fair value gaps, you want your stop loss to be at the candle low of the fair value gap. So in this example right here, you seen that my stop loss wasn't at the candle low. That's because we have two of them back to back. When we have two of them back to back, that does not have to happen all the time, because I explained it to you there. But when we have one fair value gap, one obvious fair value gap, guess where your stop loss go at? You're gonna enter here. Stop loss goes where? Under the fair value gap candle low. And then boom, you target the high. Right there, you target the high. And you will say, like, my fault, out of brain fart. So that is when you're trading for value gaps and you have one singular fair value gap, your stop loss typically should go at the low end, at the candle low of the fair value gap. Because, listen carefully, because if I'm trading inside of this fair value gap, I want to see that fair value gap hold price to go higher. I don't want to see it fail. So if this fair value gap fails, then I'm not expecting that fair value gap to hold price anymore, which means I probably shouldn't have taken that fair value gap. Okay. So when you are in a buy program, or you in a, when you trade in order flow and you see these fair value gaps, bro, go into your chart and like journal these, bro. Go into your days, get like 20 journal entries, bro. Go back 20 days and just find when it traded into fair value gaps and watch it never come below the low once we're in a price run going higher or lower. Okay. So boom, that was one. Let's go to Thursday now. Let's go to Thursday's price. All right. Okay, we had Thursday. Okay. So boom, just like yesterday, we're bullish on this day. We're gonna be looking at this price range. And if you see, every time I say that we're bullish, what do we do first? We manipulate price going lower. Boom, we took out sell side lows. We traded higher. We traded higher, and we finally got our shift in market structure. Okay, if that's what you want to be looking for these order flow, these buy side runs. You want to see a run. When you're bullish, you want to see a run lower, running lows, and then you want to see a shift in market structure higher, breaking a short term high. Okay, that's what you want to see. you have a fair value gap right here that didn't get traded into, right? Um, Boom. Now, if let's talk about if we're not trading fair value gap. Say, Lucky, you the one you told me that you wanted to see stop loss. I don't know what you trade, but let's say if you didn't trade fair value gaps, bro. So if I wasn't trading fair value gaps and I wanted to catch this price run, right? Having your having your stop losses that can't at lows, like boom, this is a low, this is a low, this is a low, this is a low. Those are all stop loss placements. So you wouldn't know that like when it forms, but let's let me show you something real quick, right? Let me show you something. Real quick, brother. Real quick, brother. Let me show you something real quick. I'm gonna play this, right? Boom. Okay, at this moment I'm expecting price to come back into this fair value gap. If it was to come back inside of this fair value gap, this is what I will be targeting right here. Boom. I will buy right there at the high end, and I will put my stop loss right at the low end of that fair value gap. So that's what it will look like, okay? But we knew it didn't trade into this fair value gap, so now let's see if we could get another entry. Okay, once I see this, once I see us make a short-term low, it don't trade down into here. And then I see us trade higher. It didn't break that. Once you see us break that down candle, that is an order block. So let's say you didn't trade this fair value gap. You can now long this, right? Because this is an order block. Say if you went long here, your stop loss would go where? Under this short-term low, because you already seen that we didn't want to go down down into it, and then we started trading higher off of it, breaking down candles. And if we're going above down candles in a buy program, I want to see down candles hold price, so we shouldn't be going back below here. So your stop loss can be here, but best case scenario, put it under this low, because we shouldn't be breaking any lows if we want to go higher into buy side, right? So boom. I was gonna say. Okay, now let's look at another. All right, so now that we got that price run out the way, let's say, boom, we wait until 10:30 because we didn't catch none of this up into this buy side, right? And we still have buy side above. Say we were going to target, I ain't gonna say this high, but it's another high above here that's to the left, but I don't feel like scrolling. So let's just zero in on here, boom. Say we got price run higher, and boom, we create another fair value gap. Right. If we're in a buy run higher or buy program, I want to see these fair value gaps hold price. So in the beginning of my video, I said fair value gap candles low should hold price. Boom, you see price go down, but do not break that candle low. And then we continue higher. All right. Price comes back down into the fair value gap, continue higher. We got, no, that's not a fair value gap. We have another fair value gap right here. Price trades into the fair value gap, doesn't break the fair value gap low, trades higher. Boom, boom, boom. So specifically for stop losses for fair value gaps, where you want to put them is you want to put your stop losses at the candle low of the fair value gap, or when you have two of them back to back, the second fair value gap, you want to put it either at the low of the fair value gap if you have enough risk, or you want to put it below 50% of the second fair value gap. Or let's say if you don't trade fair value gaps, then you want to wait to price create these swings, and then show that they want to keep going in that direction that you're trading to, and then you could place your stop loss at the swing at the swing points. These. But no, your stop loss shouldn't just be fucking. You shouldn't do this, bro. This is what you don't want to do. You don't want to get in right here. Stop loss, fucking. You want to get in at that. I don't know, bro. Just. You spray pesticides in the air, it land on the dirt. You know what I mean? Like, unless it's. All right, man. I have a company right now, so if y'all hear that, sorry. But I'm gonna go over a day where I actually took an execution. Execution. All right, so I'm gonna go on a Wednesday. Boom. I executed on Wednesday. All right. Boom. Let's get it. And this price one, right? Boom. We have another bullish day. We targeting this high. Right. Boom. Okay. That's the buy side. So up until we hit this buy side, bro, I'm expecting all my PD arrays to hold price, bro. You know what I'm saying? So our first fair value gap that we got, right, run on, stops, take out a low, take out a high. Boom, that's our first signature. After we see that signature, what can we do now? Wait for fair value gaps to form. Where's our first fair value gap? Right there. Okay. Boom. I long this fair value gap. Where did I have my stop loss at? Okay. Stop loss was, no, my entry was at the top end. Stop loss was where? No. Yes. Right here. Boom. Targeted right there. So in this case, I put my stop loss at the low end of the fair value gap. Why though? Why? Once you ask, why did you do that, bro? I thought you said if you only have one fair value gap, you put it at the candle low. Yeah, that is true. But if I'm bullish and we just took out all this sell side, bro, and we don't have no remaining sell side, and the only thing that we have left is to go higher, then I don't want price to go below consequent encroachment, which is the midpoint of that fair value gap. I want it to stay above and then continue higher, right? Because this is our first fair value gap. I don't need it to trade all the way back down into that. Now, for that's just going to take experience. You know what I'm saying? That's just going to be you taking 1,000 setups and you just going to start seeing that those things happen. But if I was a beginner, my stop loss would definitely be at the fair value gap below. And the next entry, we got price drop down into another fair value gap. If I want to see price go up to this high and we create another fair value gap and I buy inside here and I'm expecting this fair value gap to hold price to go higher, then where would my stop be? My stop would be here at the fair value gap candles low. Alright, boom. That stop would be there. Or you could put it here. But to be safe, if anybody watching this video, you're a beginner, to start out, bro, put it at the fair value gap candle low. Don't even try the 50% shit. Don't even try none of that, bro. Just put it at the low of the fair value gap. Price creates another fair value gap right here. Guess what? Could have entered there. Stop loss goes where? At the fair value gap low. Target buy side. Guess what? Another fair value gap. And you see, I'm seeing all these fair value gaps because I actually traded this day. Like, I was there. You know what I'm saying? I seen all these. Guess what? If you get in right here, you see this fair value gap? If you get in right at the high end of that fair value gap, guess where your stop loss goes? Shit doesn't change. At the fair value gap candle low. Does it go down there? Nope. Do you still win? Yep. 3-1 risk to reward, bro. So lucky, bro. This is answering your question right here, bro. You have to have your stop loss at a point where price is not going to go back down and take out your stop. And that's just gonna go from you going into your charts and studying these things, bro. Like how I'm doing right now, you could literally go into your chart, mark up every fair value gap, and see it not trade down to the fair value gap candle low. And once you get like 100 of those data entries, bro, you will know how to put your stop loss anywhere in the market without getting stopped out. You know what I'm saying? Not all the time, 100%, but for the most part, you will know how to put your stop loss. You know what I'm saying? So, but the main thing, the main takeaway I want you to get from this video, if you do trade fair value gaps, is, bro, when you are in a buy program, fair value gaps, price shouldn't trade to the candle low of the fair value gap. We should always respect the fair value gap. We shouldn't trade to the candle low if we are in order flow. You know what I'm saying? So if we're in order flow, stop loss goes under the fair value gap candles low. You know what I'm saying? And sometimes you could put it below 50% of the fair value gap, or you can put it at swing low points, bro. That's the only place you should ever put your stop loss for you specifically. For any beginner specifically, that's the only place you should ever put your stop loss. Under 50% of a fair value gap, under a down candle if you trade in order blocks, under fair value gap candle lows, and under swing points. That's it. You know what I'm saying? So that's all I got for this video, bro. I hope you learned something. I'm saying, if you did like the video, subscribe to the channel. And if you have any more questions, bro, let me know in the comments and I answer that for you, bro. And I'm gonna see y'all in the next one. Yo.